Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. It's Hump Day, July 8th. Hey, we got just one important economic news release coming out today, and that's the FOMC minutes. This is important primarily because they want to see if they can break the Fed code of determining when and by how much the Fed plans to raise interest rates the second half of the year. Now, projections are September, but they want to see if there's any inclination if behind the scenes if the Fed had set any dates as to when they expect to start raising rates and maybe by how much. So this will be coming out at 11 o'clock Pacific Standard Time this morning. So we'll expect some volatility in the morning. As a result, right now, stock market is down. Dow has actually been dropping quite a bit. It was even touching negative 200 at one point. So there's this uncertainty until we get the news of the Fed minutes. And then the other one is the Grexit, Greek exit, possibly. The leaders in Europe basically met yesterday. They basically gave Greece an extension till Sunday to come up with some type of agreement with the creditors. If they can't come up with creditors, be prepared to basically exit the euro. So they kind of gave them a deadline of Sunday. Yesterday was a deadline for Iran negotiations. It was moved over to Friday. So we'll see if that plays out. This could potentially help out oil prices, with oil helping us out, lowering gas prices. And then also, another note, it's not really affecting us yet because more of these international news keeps popping up, like Greece and the Iran negotiations. And then, also something else that came in. The real big one, actually, today is the stock market crash going on in China right now. So that's actually what's driving the market down, which I forgot to put into the headline news. My apologies. But China is actually, their crash that's going on over there is what's really affecting the markets right now. People are concerned of where China's heading, and it looks like they're quite a ways off from where they'll probably reach the bottom. But also, to get back to the second quarter corporate earnings, we start stepping into where we'll get corporate news and kind of give us a gauge as, did things pick up from the first quarter? Remember, we were kind of technically in a recession as first quarter GDP came in at negative. So we'll have to wait and see if corporate earnings picked up in the second quarter here. So let's take a look and see what bond market is. We had a price improvement yesterday with that big spike there. So depending on lenders, if they price at the height there or where they're at. So but from where we left off, we're better priced. But with the price improvement yesterday, and then a lot of them also came in and worsened prices. So, they also did close yesterday for worsened pricings. So depending on where they are, they could be either up or worse or better from where we left off at. So what I mean by that is if people if they left their prices up here, we're down here. So that means prices worsen. Now if they worsen their prices and they came out there at the end of the day, their pricing were down here and now we're up here. Now we got improvement in prices. So it depends on the type of the day and the lender. Every lender react a little bit differently. Will react a little bit differently. Sometimes they'll kind of float through it to the next day. Some will take a more conservative stance, and with the market going down, they'll worsen the prices during the daytime. But overall, if you look at it, we're better than where we were where we left the day yesterday. Now through the day it was a different story, but looks like this could pick up a little bit more. We're getting a little bit more momentum with the Dow and the stocks going down. So basically, we got a flight to safety, and that's helping out the interest rates here. All right, have a wonderful day. Thanks so much for watching. Sorry if that's a little cloudy, but it depends on the lender. So every lender is going to be a little bit different on rates, and with that much of volume or flexibility in the day, it's kind of hard to determine on there. Okay, have a great day. Thanks for watching. We'll see you guys tomorrow.